To our end of day report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. All right, so Bitcoin futures. I want to show you something here, if I may, if I can find it. Let's see. Okay. You don't see it on this chart. You can't find it on the futures chart, but there is one on in the cash market. Hold on for a second. Let me get the right date for you. April the 26th. Okay. So that would be right here. Okay, so there's an April the 26th bar in both Bitcoin and Ethereum. All right. That is the consolidation bar. It won't show up on the algo futures chart, but it will show up on the cash market. That bar from April, that is your consolidation bar. I expect price action is going to stay within that the range of that bar for the foreseeable near future. Okay. That's probably one of the reasons why the algo chart on the futures has gone neutral, because of that. All right. So we're not going to do anything in this market until it comes off neutralized, and then we'll figure out what the market wants to do from there. All right. So patience wins the day. We're stepping aside Bitcoin for now and Ethereum. All right. Here's your silver. So silver hits a new 52-week high, ladies and gentlemen. Silver has woken up, and yes, you see it on the chart. The bull market has reclaimed the silver price. Silver is now officially in a locked-in bull market. It is official tissue. All right. The market has relocked itself in. It's come off of the bearish trend momentum reading, and now we have a bullish one, and we just hit a fresh 52-week high. How high is it gonna go? Well, the next stop above is $28. This is getting quite interesting. Now, it should be noted that we did have this positive bot check way back here, and the market took a while to give it the fruition. But that's why these bot checks and rally and crash alerts are paramount. When you see them, you got to respond correctly. So I see silver wide open at this point. You're in a locked-in bull market. The trend has reclaimed the market. So when you have a green bullish trend momentum reading, you're in the buy the pullback, buy the dip mode, and that's just what it is. So this market's locked in. It's bullish. It's a buy. Strong buy, actually. All right, looking at nat gas, still locked in the bear market. This one is going down. Next one is the Dow. The Dow is still in a bull market, but with a bearish trend momentum reading, and we're starting to get that downside production. The market tested the 33,000 level, which is the top of the Kumo cloud today, and it did it successfully. All right, it came down, tested it, and closed above it. This is the first test. Tomorrow and Monday and Tuesday will be critical. Can the 33,000 support hold, or is this market going to break and roll over? And if it does drop out of this Kumo cloud, it gets into free fall, and it will hit the 52-week lows fast and furious. However, if the 30,000 holds, then the bull market might go ahead and reclaim this market, and this red line turns green, and then it's off to the races. So interesting to see how the markets are responding to all this bad economic data. Looking at the NASDAQ 100, we have a bull market with a bearish trend momentum reading. For all this time, it was a bullish trend momentum reading. Now it's a bearish one. And we got a crash alert for tonight into tomorrow's trading. I know. Top of the Kumo cloud needs to be tested, man. It's going to have to come down here to this, this 13, is 12,000. I will just call it 13,000. Is it a good one? We'll call it that for now. Yeah, we'll call it that for now. So, yeah, 12,000-ish. What, 12,000? Okay, 12,638 and 3/4. So that's where it needs to go. All right, that's where it needs to test that. All right, that's the top of the Kumo cloud support. If it can successfully test it, then it won't fall below 12,000 and go in the free fall and take out the 52-week low. But right now, it's looking like it is poised to do just that. Next up, we got gold. Gold, just like silver, is now locked in. The gold market has reclaimed the price. You hit a new 52-week high today. You're in a locked-in bull market. You're in buy the pullback, buy the dip mode. This thing is off. 2,100 is the next upside target. Now, tomorrow is Friday. We could have a take back Friday tomorrow in most markets, but it shouldn't be too significant or substantial. So if the price pulls back in gold and silver, it shouldn't be too heavy. But this is a very, very powerful market right now. Gold is off to the races. Next up is the S&P 500. You can see here it's in a bear market with a bearish trend momentum reading. And we got more downside production. And we got a crash alert for tonight and tomorrow's trading. And the market needs to test the top of the Kumo cloud support at 4,000. So if that holds, then this market will be in good hands. If not, then you're going to the 52-week lows because it's going to just fall right out of this cloud and fall right over the cliff. Next up is oil. Crude oil is in a bear market. It's locked in. So this market is in buy the rally mode. And after that huge sell-off today, what did it do? It gave you a bearish pointer and the market went on neutralized. So this bar is going to represent the consolidation bar where prices will probably stay within that range of this bar for a while, and then the bearish pointer will be taken out. Now look how long it took for the last bearish pointer to get taken out on the chart. The last bearish pointer was back here the week of March the 20th of this year. You put in a bearish pointer, right? Spike bottom low, 52-week low to be exact. Then the market immediately corrects. And we're just now coming down here to take out this bearish pointer. And again, this was March of this year, and here we are now in May of this year. It took from March until May to not only take out the bearish pointer, but also do so in a new 52-week low fashion. It's just like I've always taught you since I've been here on YouTube. Bearish pointers and gaps always get filled at some point. It can be sooner rather than later, or it can be much, much later, way beyond what you think. But the market will rectify bullish and bearish pointers and gaps. It's just how it is. All right. I didn't make it up. This is a fact of the markets. I don't care if it's Bitcoin. I don't care if you're trading butter. I don't care if you're trading, whatever. Apple computer. Doesn't matter what it is. Pork bellies. If there's a gap or a bullish or bearish point on the chart, it's going to get cleared at some point in the future. And that's what you see here in this crude oil. This is a perfect teaching moment. You saw this bearish pointer. You figured it was never going to get taken out. You figured it would never happen. The market has ignored it, and then it gapped up too. So that was another slap in the face. The market saying, I don't care what you say. I'm not filling any pointers. I'm not filling any gaps. I'm just moving. I'm vacating the area. Oh, no. Okay, I changed my mind. Oh, changed my mind. Just close the gap. Okay, well, you know what? We might as well keep on going. Is there any pointers back here we need to take out? Yep, there was one right here. Bam, took that out. And then here we go. We took this one out too. So there you go, folks. Perfect example of pointers getting taken out, no matter how long it takes. All right, looking at the Russell. So the Russell is locked in. It's a bear market and it's locked in. You got a bearish trend momentum reading in a bear market. There's nothing to talk about. This market's headed toward the 52-week lows, and that's just how it is. All right. And the US dollar index, we got another issue that we need to talk about. All right. So you're in a bear market. We know that, right? See a grizzly bear in the right bottom right hand corner. See the bearish, you're in a bear market. All right. You got a bullish trend momentum reading. So that means you're in a buy the pull back, buy the dip mode in this bear market. And you have back-to-back issues now. You have a positive bot check back here. You got a little bit of something right here, but not enough for this. This does not equal this. And then you get another bot check. Someone or something is trying to build a position in this market. Methinks they're trying to prop the dollar up because they need that strong dollar. They need the dollar to stay above par, at least for now. That's why you got these bot checks. At 2 points, the market is being bid, whether it be secretly or whatever, but the system picks these things up. Back-to-back bot checks, folks. That means an upsurge is coming. A rally in the dollar is coming. Whether it makes sense or not, a rally in the dollar is coming forthwith, and you will be wise to acknowledge it. The only thing that can cancel this would be for this green line to turn red for the bear market to reclaim the price action. That would do away with this. Normally, though, when you have these bot checks, the bot checks don't have no comp. They do what they want to do. Every bot check, you see a downward move of significance every time, without fail, every time. So be prepared for that. Next up, we got the Ethereum. It's like I said, with the Bitcoin, we're standing aside for now. You can the Ethereum's tradable though. It's not in a neutralized state, and you have a rally alert for tonight into tomorrow's trading. So it's the Ethereum is basically trying to decouple from the Bitcoin, but it still has that April consolidation bar that it hasn't been able to get out from under. So if it can, then maybe this will have some significance to it, and you'll get a nice little push here. So we'll see what happens, but you do have a rally alert for the Ethereum. So slightly different story with the Ethereum over the Bitcoin for now. All right, so there you have it, folks. That is our look at our markets. That's what happened so thus far. So just get ready. There are a lot of alerts, as you've seen, and you gotta be mindful of them. Do not ignore them, because that's how you get really hurt in these markets. And with that being said, the system works if you work the system. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Allow trade setups to develop. Sometimes you could be setting in a trade for an extended period of time, and you're you're experiencing drawdown while you're doing it. And then once in a blue moon, the market will go against you, stop you out, and you got to lick your wounds and get back in the market, because the trade you miss is the trade that would have put you back in the black. All right. So this is a disciplined sport that you got to stick with. It's the long term that you're looking to, not the quick, make a quick buck. All right. You got to trade with the markets. You got to trade. You got to take every trade, and you got to manage your positions. And that's just the game. It is what it is. Okay. So if you desire to make a lot of money in these markets, then you're going to have to stick with it. And you're going to have to be disciplined and make sure you put your trades on like you're supposed to. That's one of the biggest mistakes people make, is forgetting to put trades on, and you miss big moves, explosive moves in the market because you're not in the market. All right. So remember these things. And if you go to pulsewavetrading.com, if you are a member, we do have under our educational tab, we do have a resource that I put together for new traders, giving you the rules of the game. And if you have never heard that, you're going to want to go and watch that, and you're going to glean a lot of helpful information for the mindset of an investor, the mindset of a trader. Okay. And with that being said, don't forget to smash the like button. Everyone have a great weekend, and I'm out. Peace.